How big should your trade be? One of the most important questions that we ask ourselves on a consistent basis as traders. Should I high leverage for just a few ticks? I mean, I see a lot of trades that would allow me to do that. Or should I trade small, maybe just one MNQ, but then I'm going to be trading forever? The answer is in the middle ground, guys. So in this video, I'm going to talk about proper risk management and really the management of your capital stack. The whole idea and philosophy as a trader is that we have an amount of capital and we're risking that capital in order to make money. So trading as a job is very different than other types of work in that we're not just spending time. We actually have to come with money on the table. Now, the cool thing about MyFundedFutures is that we're giving you the money to trade, right, in this prop account. And you essentially are, your maximum downside risk is just the account, but you still don't want to blow that account up, right? So whether you're trading gold, NQ futures, ES futures, if you're trading, currency futures, if you're an Forex trader, and you're really going to want to pay attention to this video about risk management and size. My name is Forrest. I've passed prop accounts at quite a few different firms. I've been trading for a very, very long time in my own personal accounts, options, futures primarily. And I'm going to give you my ideas and philosophies that should help you pass your first account here at MyFundedFutures. Let's get into it. While I open this up, go ahead and subscribe to this channel. We're going to be putting out a ton of educational content. Our goal is to get you funded as quickly as possible in trading, hopefully tomorrow. All right, so let's break down what we're looking at. First, this is NQ. I am an index trader primarily, right? So trading futures, I trade ES and NQ. NQ is the E-mini NASDAQ 100 futures. Quick little data points if this is your first time looking at this. 1 point on NQ is worth $20, right? 1 point equal to $1 change in price, right? So let's break those two things down. You can see here that the market closed at 18,063.50. That's the price. If the price went from 18,063.50 to 18,064.50, a $1 increase in price, that's 1 point. And that 1 point is worth $20 in my pocket if I was long. One tick is 0.25 and each tick is worth $12.50. One tick is 0.25 and each tick is worth $5. So 0.25 times 4 is equal to 1, obviously, right? Understand that. So, and the 1 point is worth $20. $20 divided by $4 is equal to $5 a tick. It all adds up, okay? Hopefully that's not complicated. The really important thing here to know is, you can pause the video right here before I erase this, is that one tick is equal to 0.25. Each tick is worth $5 because a point is worth $20. Cool. So risk management, how does all that tie into risk management? Well, MyFundedFutures, there's a number of different accounts and it doesn't really matter which one you have. You could have an end of day drawdown. You could have, a trailing account, a static account, whatever the account type is that you choose to get with us. That really is up to your risk management. But let's assume that you have an account with, say, a $2,000 drawdown value. Let's assume you have 2K drawdown. However that drawdown is calculated, it really doesn't matter. And I'm going to encourage you to think of it like this because I've passed and blown up tons of accounts, right, with different strategies. I'll be honest with you guys. I've done both. I have tested strategies to their limits. I've done high leverage trades to try to pass instantly. I've tested this multiple times. And in aggregate, I'm telling you, for prop accounts, the best way to pass is to trade normal size and just be patient for the big wins. And I'm going to demonstrate that using Friday's price action and showing the kind of trades that you could have got here with really just one MNQ. Okay, so one MNQ, if you went short one MNQ, we actually had someone in the Discord that I'm a part of, Trade Edge. We do education with MyFundedFutures every other Friday. So if you want to tune in live to that, make sure you join the MyFundedFutures Discord where we do education videos for you all. But let's assume you went short up here at, let's do the top of the market. We'll keep it very simple. Actually, we'll make it a little bit more realistic. So we go short at 18,260.75. We go short here with one MNQ, And again, one NQ is worth $20. 1 point is equal to $1 change. One tick is equal to 0.25. One MNQ is even smaller than that. So one MNQ is equal to $2. It's a tenth of the size. Okay, that's the factor here. And I'm going to use both examples. So we go short here with one MNQ, and someone else goes short one NQ. Short here with one MNQ. One MNQ is equal to $2. Someone else goes short with one NQ, and one NQ is worth $20. Okay, we have all these stats that we just broke down here. Where should we take profit? Let's assume we're really good and we take profit at this bottom here. We get our trailing stop hits here at 18,115. Let's go for a round number 20. 18,120. Our trailing stop gets hit. We get out here. Now, on the other side, where should our stop be when we enter the trade, right? We go short here. Well, we look to the left and we can see that the overnight high is up here at 18,320. Maybe we turn on the visible range volume profile to try to understand where the volume shelf is. We see that there's actually a volume shelf here at 18,341. There's this trend line. So we put a stop up here at 18,341. Here's our stop. Here is our stop. So how much are we risking? So from here to here to here is, we'll say 80 points, 80 points of risk for what is the actual trade that we ended up getting? 142. This isn't true RR because you could go down to the 233. But let's just go to where we actually get out for 100 and let's just call it 140. We make 140 points. 80 points of risk, we make 140 points. Whew, a lot of setup there, a lot of setup here, okay? But this is important. This is really, really important because this is where, people ultimately get beat up, right? So let's review what we have so far. We go short up here at 18,260. We've got 2K of drawdown. We get out down here. We make 140 points and we're risking 80 points. What is the potential impact to our $2,000 of drawdown? So for us, and we'll do this in, let's say green. For us, we risk $2 times 80, $160, and make what's $2 times 140? $280. That's a solid day. $280 a day. By the way, guys, if you do that for 30 days, let's see what the math is. 280 times 30, you make an $8,400. It's probably more than you made over your last 30 days of trading. A little over $8,000 if you just do $280 a day. So we risk $160 and we make $180. So our maximum drawdown, assuming we blow this trade up, if we lose, our account has 2,000 minus 160, which is equal to $1,840. $1,840. Not bad. So how many times could we lose? Here's the real question, right? Let's finish this exercise. The question is, how many times can we lose, assuming we do this over and over again? So let's do the 2,000 divided by 140 is equal to, let's see, 2,000 divided by 140, 14 trades. 14 trades in a row we can lose. So that's assuming we never, ever, ever, ever win anything. We have 14 trades in a row we can lose. Trading one M&Q, okay? That's a pretty big trade, over 100-point trade. What about the person trading one NQ? Okay, and there's a lot of stuff all over the place now. We'll come back and we'll wrap this up, I promise. So this person, everything is times 10. Times 10, it's a tenth of the value. So if we're risking $160, they are risking, and we'll do this in red, we risk 160, they risk 1,600. Sorry, I have a lot of numbers in my head. It's just times 10. So they risk 1,600. They look to make 2,800. Literally just 10x our positions. It's just 10x everything, right? 160, 1,600, 280, 2,800. The problem is, and this becomes very apparent, if you only have $2,000 of drawdown, 2,000 minus 1,600 is 400. So you don't have opportunity to be wrong. And if our goal as a trader is to manage a capital stack, our goal as a trader is to keep and grow a capital stack, we need as many at-bats as possible. I want you to keep this in mind because a lot of you are blowing accounts up and you want to be quick to win, but you keep blowing up. And if you look back at how long you've been losing, it would have made sense for you to trade smaller in the first place, right? And I'll say this again. A lot of you are rushing to pass, and because you are rushing, it's taking you longer than if you just were patient. And as someone who runs a Discord, I've seen a lot of things. I've tried a bunch of strategies myself. I continue to try different strategies. I have a ton of data that kind of shows what works over the long run, right? High risk, high leverage strategies can pay out, but you're more likely to blow up, honestly, right? So you'll flip a few every once in a while. Ultimately, your goal as a trader should be to be consistent, try to get consistent payouts, grow that capital stack. The more capital that you have, by the way, the more at-bats you can take. So the math keeps getting better and better. So let's go back to this other view here. Let's assume if we make the $280, we risk $140 on the next trade. You can see that 280 minus 140 is 120. You still end up 120 up just from the first trade, because 280 minus 140 is equal to $120. So by having this small, consistent risk, we can still continue to grow our capital stack and give ourselves more wiggle room over time. That's obvious, right? As you make money, you can make more heirs. The problem is that as people make money, the first thing that they do is they start to lever up. They go from 1 MNQ to 2 MNQ. Say you have this amazing trade, you go from 1 MNQ and then you size up to 1 NQ. Now it doesn't matter, how good of a trader you are, you could wipe all of that out. How many times have you wiped out days of good progress with just one trade? We've all done it. We've all been there. Have the data to prove it. So really the way that you should be trading, if you really want to pass and you want to become a funded trader with MyFundedFutures, is trade small. I use 1 MNQ to make the numbers as simple and as small as possible. Now I got to delete all these things on my chart because this is the chart that I actually use. But hopefully this gives you an idea of the amount of money that you can make. And again, I really, really want to emphasize the math of making $280 a day. 280 times 30 is 8,400. We'll just do 20 because there's 5 trading days in a week times 4 weeks in a month. That's $5,600 a month. $5,600 a month, which is $60K a year. Now, maybe that's not the $1 million Lamborghini money that you wanted to make in your first year as a trader, but that's a lot of money. That's a salary. That's like the median salary in the United States of America that you got just by looking at squiggly lines on a screen and by employing a conservative strategy, right? This can replace a lot of other income. There's a lot of things that you could do with $60,000. You shouldn't scoff at it, especially if you're blowing up accounts and haven't even got to a payout yet, either from us or any other firm. We want you to win with us. That's our goal, is to build and develop promising new traders. So reduce your risk. If you haven't signed up for an account yet, check out the links down below in the description of this video. You can use code Force Trading for whatever account that you want to sign up for. Please subscribe to our channel. Check out our Discord. If you want some help with trading, you can find my YouTube channel and my community and things there. Again, we do education every other Friday in the MyFundedFutures Discord. We are there talking live about the market, teaching volume profile and other things to help people ultimately pass their accounts. We're doing everything we can in our power to empower you as a trader. And with that, call it a wrap, and we'll see you in the next one. Peace.